Good morning, everyone. We're so glad that you could join us this morning. We're going to talk about, obviously, the COVID-19 crisis and how our government is responding and how we should respond to what the government is offering through different programs, through loans, through different grants to help us, the American people. Obviously, the government has our money that they're spending, and they're going to give us some of our money back to help respond in this crisis and all the unemployment. For those who haven't maybe watched online this morning, we had a 6.6 million people filed for unemployment this week, which means almost 10 million people in the last 8 days have filed for unemployment. So we are in a very unusual situation. It's about 10 times more than we've ever had before in that kind of time period. And so obviously many people, many employers are going through a very, very difficult time, and our government is responding to that. And we want to talk about today what they're doing and what we should do in this time of crisis. So today we have with us Annie Fairchild. Annie is a CPA, has an accounting firm here in the Dallas-Fort Worth area, AFairchild. She has lots of employees. She's been in the accounting business for many years. She really kind of specializes almost in learning new tax law and being one of the first people to really analyze what's going on, what the government's trying to do, reading all the bills themselves and all the guidelines that are coming out from different organizations and putting them together and then helping people understand what they need to do. We also have John Knight with us today. John is a Senior Vice President of Commercial Lending at First Financial Bank. And so he's going to answer questions about banking questions and other provisions of the CARES Act. And so we've got really two experts on this subject. So I'm really excited to have them there with us today. And so John and Annie, thank you for joining us this morning. We really appreciate it. We have about 300 people at least on the webinar with us today. So we welcome you this morning. I want to open in prayer and then we'll get started. So Father, we just come in Jesus' name, and Lord, ask that you would lead and guide your people through this pandemic crisis. Lord, there have been many crises throughout history. None of them caught you by surprise. And so Lord, we come to you today to ask for wisdom, to ask for knowledge and understanding, and obviously to ask for your revelation, Father, that you would lead us and guide us by the Holy Spirit. And so, Father, we just thank you for that, and we praise your name today. In the name of your Son, the Lord Jesus Christ. Amen. We are going to answer questions at the end of the presentation, but Annie Fairchild is going to do a presentation, and then she'll work together with John during that presentation. He may interject some things or add some things. I may say something. But then after that, we're going to try and answer your questions through the Q&A feature, the chat feature on Zoom here. And so with all that being said, Annie, would you please give us your presentation on the CARES Act?
Well, thank you for having us, Steve. I think for all of you, having Steve and his team putting this together at the last minute really shows how much Kingdom Business Leaders and Gateway Church is committed to helping businesses. In the last 2 weeks, there's just been a significant amount of laws that have come forth. Before we get into our program, and Margot, if you want to bring up that first page there, but before we get into our program, I wanted just to talk about some of the other things that are happening right now. One, your April 15th, that has been delayed until July 15th. So that is all taxes that are due on April 15th. The extension has been moved to July 15th, as well as payment to July 15th. Also your first quarter payments that are normally due on April 15th, that is, excuse me, also been moved to July 15th. Then we also have the employee retention payroll tax credits. Those are happening right now. The payroll tax deferrals. The sick, family, and medical leave tax credits and laws are going into effect. In fact, yesterday, April 1st, was the first day that some of those required medical leaves were happening. And you also had required posters that you needed to start posting as of yesterday. If you don't have those, you might want to go to the DOL and grab those down, or you can email me and I can forward those to you. We also have a couple things for your tax returns that your CPA should be informing you about, and that's your loss carrybacks that disappeared with the 18 law, and that is back again for this period, and also some accelerated depreciation. So today we're going to really just talk about the payroll protection program. It just came into law last Friday, so it's very new. It hit us very hard, and really the SBA really just started giving us guidance about that 2 days ago and even yesterday. Is that what you're finding out, John? Just you're getting new information every day?
Yeah, absolutely. And final guidance still isn't out. There's a lot of unanswered questions. So appreciate the opportunity to talk today and bring our best information to everyone. We know you've got a lot of questions, a lot of concern. And while this is the information that we know today from looking at the bill, from looking at the guidance from the SBA, we do know that things have already changed from the bill to what the guidance is today. We're hoping for final guidance by the end of the day because this application is supposed to go live tomorrow. So
that's right. So tomorrow is the first day that businesses and sole proprietors can put in their application. Next week are entrepreneurs and self-employed. But there's three parts of the program, and I think this is big. This is what's very confusing to people. There's the loan and the calculation of the loan. Then there's how the loans proceeds can be used, and then the forgiveness of the loan and what that means. And people are getting confused about all those three parts. So I'm going to try to help really lay it out for you so that you know what's there. So who qualifies for this? And this has been a confusion part too, but 501c3 nonprofits, not every nonprofit. I've been getting a lot of questions about that, but 501c3 nonprofits qualify. Pretty much all businesses that are less than 500 employees per location. There are some exceptions in there. Also, if you're a sole proprietor, you fill out a Schedule C on your 1040, you qualify as well. But you must have been in operation on February 15th of 2020 to qualify, and you would have to have had payroll from February 15th to February 29th. There is the more than 500 employees exception, and that is if your NAICS code falls into that 72 code. And there's also some other exceptions where you're a franchise or maybe some other companies. If you're over 500 employees, you really need to ask either your banker or your CPA to look into it a little bit further for you to see if you might qualify. So how much can you borrow? And it's the average payroll cost. Now the law said the average payroll cost for the year prior to the date that you get your loan. That's been clarified a little bit just yesterday, and SBA guidance is saying we have to use the year 2019. Is that what you're requiring, John? You have to use 2019?
Yeah, we're going to look at the 941s for 2019.
And is that the documentation that you're requiring, is those 941s to tie to that?
Yeah, and again, we don't have final guidance, so our best guess and what we're asking people to prepare for if they want to borrow for First Financial is to have your 941s, all four of them, for your quarterly filing, in addition to a payroll roster. Because I know we're going to get in it in a minute, some of the exclusions, but if you have an employee over 100,000, the portion of their pay over 100,000 is not eligible. So we need to see what each person made. And so we'll look at the 941 totals, and then we'll take out any of the excluded salaries.
So that would be, just to clarify, if someone made $150,000, they make over 100,000, but you can still include their payroll. You'll just have to exclude or deduct $50,000 from your average monthly payroll. For your yearly payroll. But but that per $100,000, you can still get a loan for their salary, but only up to $100,000.
That's right. It doesn't exclude them entirely, just the portion of pay over 100,000.
So, and then what else is beyond that? So what are payroll costs? And this term payroll cost, you're going to see that multiple times throughout the law and in this presentation. And so the definition of payroll cost are your wages, tips, all your medical leave, an allowance for dismissal or separation, and all of your healthcare benefits. So that's not going to show up on your payroll reports. The healthcare benefit that you're paying for your employees, also your retirement benefits. If you do any matching at the end of the year, that's not likely going to be showing up on your payroll stub, but that's going to be included in this calculation. And also your state and local tax assessed. So that's going to be your state unemployment, not your federal unemployment, but your state unemployment can be included in this. So this is a good summary right here to use when you are calculating your payroll costs, because you're going to want your cost to be your maximum amount, or so that you can get that maximum amount of your loan.
And Annie, the guidance we're given. Go ahead, Steve.
Annie, what about dividends?
No, it has to be W-2 wages.
Okay.
The guidance we're given is really take what you're going to get forgiven. Don't take extra. The spirit is to use it in the 8 weeks. The spirit's to, the intention of the bill is to get the money into the economy and flowing. So we're really advising people, don't take more than what you're going to get forgiven.
Yeah, I think that is with the spirit, John, because this is a certain amount of money. It's not an unlimited bucket there. It's a certain amount of money, and there's a lot of businesses out there hurting, wondering how we're going to make our next payroll, and they really need this money to pay their people. If you are self-employed, you also qualify for this, and that is going to be the compensation that you're paying to your employees. If you have employees, if you don't have employees, they're going to look at your wages, your income, your net earnings, but it cannot be more than $100,000 in 1 year. Have you received more guidance on that, John, how you're going to calculate for your self-employed?
I think we're going to just take their tax return and look at their income on the tax return. Still don't have guidance from the SBA, but that's the only way that we could rationalize or come up with a reasonable way to accomplish that number.
All right. So then once you have that amount, let's see, what is not included? Sorry about that. What is not included is your payroll cost. So like we've already mentioned, you can't do anything over 100,000, but it can be less. If you're only giving your report for a prorated period, you just have to prorate that $100,000 into the month. Also, people have asked, and there's been a lot of misinformation out there. Some people have thought payroll taxes were included in the calculation. It is not included. And anybody whose principal residence is outside the U.S., that is not included either.
Yeah, and one big thing that's not included, and there's been a lot of misinformation around this, is the 1099. So 1099s are independent contractors. They're not employees. They will need to apply on April 10th for their own loan. So if you employ a lot of 1099 labor, independent contractors, they do not count towards your total. And that's the best and latest information I've had. I've seen it both ways, but I feel very certain that that's going to be the case and that they'll need to apply next week for their own.
Right. Thank you for bringing that up, John, because that has been a big question on if we can include those 1099 payments. But you're right. I think how the law was written, there was an and and an or in there, and they were bringing that and in to that next paragraph to include the self-employed. So it can only be your payroll and those payroll costs that we talked about. So then you are limited on how you can use these funds. So you're going to payroll costs, all of that information times your 2.5 is the max that you can borrow. And then what you can borrow, then once you get the loan, how can you use the funds? Well, you can use them for payroll cost. And we've just recently, I think yesterday or so, received notification from the SBA and the Treasury that because of the high demand for this loan, they're probably going to limit your forgiveness is going to be only 75% of your payroll costs. So the max is, the whole purpose is to help keep people employed, to help them be able to pay their own personal mortgage and provide food for their family. But other ways you can use the proceeds are mortgage interest, rent or lease agreement, utilities. And what's interesting in utilities is that there's electricity, gas, and water, but there's also transportation in there. And transportation is not defined in the law. Telephone and internet, and then interest on other obligations. This is how you can use it. This is not necessarily what's going to be forgiven, but it's how you can use it. I believe right now their focus is on the payroll cost and helping people get their loans, because this part of it is going to be more 8 weeks, that will have a little bit more time for them to define it and get us some more regulations and guidance on it.
Yeah, Annie, one thing I want to clarify for those who are listening, we really haven't talked about yet, is that what the government is really trying to do is get people either re-employed who've been laid off, or to keep your employees for the next 8 weeks. And they're hoping, obviously, in the next 8 weeks that the economy will recover. And based on the revenues of your business, at that point, you'll be able to keep your employees working. So this is a loan that's really designed to help you keep your employees and then pay some of your other costs, mortgage interest, rent, utilities, and such. But it's really designed mainly to keep people employed for the next 8 weeks. When I say the next 8 weeks, 8 weeks from the date that you actually receive the loan.
Yeah, Steve, if you think about what happened in 2009, 2010, unemployment was extended to 18 months. There was a disincentive for some people to go back to work. So the way that the government's funneling the money now is to the business owners, knowing that business owners are going to be more efficient at keeping people off unemployment if they have the means to do so than just paying people to be unemployed. So I think it's a noble act, and it is really, because we also know that once that disruption of unemployment happens, that slows down the economy throughout. So this is really to keep your doors open during the next 8 weeks, whether you can open your doors or not, the proverbial doors, by paying your rent, by paying your mortgage interest, and keeping your people employed.
And of course, what we're saying is, as an employer, you're also getting money to pay yourself up to $100,000 prorated over 8 weeks. So it's not just your employees that will get money. You're an employee as well of a company. And so obviously, if you make more than $100,000, the government's not going to loan you the money for that, but they'll loan you money up to the amount that you would make in 2 weeks based on a $100,000 salary. All right. That's
the
great.
important piece there is if they're paying themselves as a W-2 employee. So
Correct.
if you're taking distributions or draws, unfortunately, that's not going to be part of the equation.
Right. So it has to be W-2 wages that you're paying yourself, or if you're a sole proprietor, wages payments that you're making out of being a Schedule C company. It is guaranteed by the SBA, and there is no personal guarantee on these. There's also no collateral that's going to be required. So this is where people are very interested in what part is not forgiven. It does have a maximum maturity of 10 years, although John, it says 10 years in the law and interest rate not to exceed 4% in the law, but the SBA application has 2 years on there. Have you addressed that?
Yeah. So this is one of those pretty monumental shifts between what the legislation passed was and what the guidance or execution of this program will be. So it's a 2-year loan at 0.5%. So that's why, as a bank, we're really going to focus on the forgivable part and limit that lending to what can be forgiven, because as a bank, we can't have a lot of loans at 0.5% interest for the next 2 years.
Hey, John, could you repeat that? You broke up there.
Yeah, sorry, Steve. So this is a piece where the legislation passed has changed dramatically from the guidance that the SBA has given. Now they've come out and said that this loan is going to be a 2-year loan, and the interest rate is going to be 0.5%. So as a bank, we're really focused on helping our customers figure out what that number is that's going to be forgiven, because as a for-profit company, we can't have loans on our books for the next 2 years at 0.5%.
Yeah, so in other words, just to make sure everyone's understanding, you are going to focus on loans to businesses that, and we'll talk about how you get the loan forgiven, because that's really what I think most people are interested in. How do I borrow the money and not have to pay it back? And there are certain things you have to do to not pay it back. But if you do those things, you will not have to pay it back. And what you're looking at, John, and most banks are going to look at is, I want to loan you the money because it's the banks loaning the money. The SBA, the government is loaning money to corporations, to businesses, to self-employed people through banks, through the SBA, Small Business Administration, but the SBA is administering the loans through commercial lending banks. And so if you want to, by the way, if you want to get a loan, you have to apply at this point, you have to apply basically at a bank or federal credit union that's already an approved SBA bank. And so, but these banks are saying, gosh, we're not going to make any money off these loans. There is a loan origination fee, but the company does not pay that. The SBA is going to pay that. But the banks aren't making much money off these loans, so they're going to want to, what they're going to want to do is not really, they want to loan the money for 8 weeks and then have that loan forgiven and repaid by the government, so that they really don't want to carry a loan on the books at 0.5% interest. So that's what most banks are going to be looking at when you come in to borrow money on this loan. They're going to be looking at, okay, we want to make sure that you follow the requirements and that we get the money from the government and get repaid, and not have to carry this loan on our books at 0.5% interest. Is that correct, John?
Absolutely. Yes, sir.
All right.
And that sticks to the spirit of the law, or the spirit of the gift. I mean, this is a gift. Steve, you're 100% right. These are our tax dollars, but they're funding it back into the economy to be used in a very short period of time for what we hope is a very short crisis. But
Right.
instead of letting it turn into a long-term economic crisis, we're going to overseed it and keep everybody afloat. The funds need to be expended in the next 8 weeks for the right purposes.
Absolutely.
So even though the law said a maximum maturity of 10 years, I think after this became known and very popular and people starting to hear about it, I'm guessing that's why they changed it to the 2 years, or they made that determination to do that. So the what period of the cost are forgiven, basically I quoted that directly from the law, but it's basically the 8 weeks beginning with the date of the loan. So as soon as the loan is funded, then you have 8 weeks to spend it for those payroll costs and other costs, and that amount will be forgiven. And so there'll be a new calculation to determine that amount and send to the bank. And so then what are the costs that are forgiven? Well, we talked about payroll cost and we defined that on that earlier slide. So you might want to go back to that and re-look at that, because those are the payroll costs that would be forgiven. And then any mortgage interest on debt secured before February 15th. It doesn't say other debt. So you can use it for other debt, interest on other debt, but that's not what will be forgiven. So note that there's a difference between what you can get the loan for, how you can use the loan versus what you can have it forgiven for. Rental payments, including lease payments. And lease payments are not defined. Again, I think that's regulations that we're going to see come out later, where we're going to get some definitions of these terms. And then utility payments, that did not change from the amount of what you can use it for. But how can the forgiveness be reduced? So you have this amount that you've calculated for this 8 weeks, but how can that be reduced? Well, it can be reduced if you have a reduction in your employees, reduction in your salaries, and then likely not more than 25% for the non-payroll costs. So let's talk about the reduction in the number of employees.
Can I interject just something there? Because it's a little bit confusion, like how can the forgiveness be reduced? What does that mean? So here's what it means is that the bank is going to loan you 8 weeks based on a maximum of 2.5 times these wages and costs. You can use the money for other things, but if you don't use the money, if you use the money for other things, that may not be forgiven by the government, may not be paid by the government. And so you have to make sure that, for example, if you start off with 20 employees and then you let some of them go, but you borrowed the money to pay them, the government's going to make you pay that back. That's a loan. They're going to make you pay that back. So there's some things you spend the money on. You borrow the loan based on this payroll times 2.5 times up to $10 million. So you borrow this money, depending on how you spend it. You can have 100% of the loan forgiven or just a percentage of the loan forgiven. So you need to make sure that you spend it on the right things. And that's what Annie's talking about.
Well, even you can have a loan for up to 2.5 times your payroll. Yeah, you're right. And it depends on how much you've got going on there. It'll be calculated in that manner. You're right, Steve. So this is your reduction in number of employees, and you look at what employees you have at these time periods, and that's going to determine that. Again, it's going back to the purpose. The whole purpose is you keep employees employed. There's a lot of uncertainty out there. So even if your business is not directly affected, it might be indirectly affected. You might have a lot of work to do, but your clients or people that you work with don't have the money to pay you. You know, that's an impact. Or you might have had to lay people off, or maybe you're going to just keep people on. I talked to a client yesterday. He has a manufacturing type business. I said, well, right now you could spend this time and they're allowed to come to work. So get your manufacturing place in tip-top shape, get yourself really organized, things that we put off to the side that we don't have time to do. There's a time that you can do that if they're allowed to come to work. But it's to giving you money to help keep them employed and help those employees out. And then the reduction in wages. So again, I put the whole quote there, but basically what that is saying is employees employed during that covered period, if they have a reduction of pay in excess of 25%, then there's going to be a calculation there that the forgiveness part is going to be reduced. It gets pretty complicated. I think they'll help us out a little bit more once we've gotten past this first phase. This first phase has been pretty overwhelming because we've got to remember this just came out last Friday afternoon. We really didn't have guidance. And John, I think the first day the forms came out, a draft of the form was on Tuesday afternoon. And here it is just Thursday morning. And then they're going to start funding tomorrow. So it's moving extremely fast.
Absolutely. Something like this in years past, this is a 3-4 week if it's rushed. For the SBA to move this fast is pretty remarkable. And I think it goes to show that the government really wants to keep us all together.
Hey, John, based on my research, I'm showing that there's not even a final form out yet. Is that correct? Or is there a form that you're trying to use? I know they've had some drafts out there, but is there a final form that's been issued by the Treasury yet?
Yeah, there's an application form, but is that the final one? I suspect not. I mean, there's questions on it that we have, so we're making the best effort to take that application, map it into our application. So here's another thing to think about Andy said, funding tomorrow. We as a bank expect to go live with an application tomorrow. I think that every bank is probably going to make this as electronic as possible. Two reasons. One, you've got 30 million people eligible for this, so all of your customers are going to come to you and ask for this loan, more than likely. So one, you need it to be online and electronic for the efficiency that brings. But equally important, we got to remember the reason we're here is the coronavirus. It doesn't make sense to have 100 people in a bank lobby saying, what do I need to do next? So we've got an application that mirrors this form, but to both of y'all's point, is this the final form? We don't know. We hope it gets finalized quick because we expect to go live tomorrow.
Yeah, another thing that I believe you're recommending, John, is that if you're a company or self-employed, that you go to your bank, because hopefully, your bank has your information, has your social security number, has your EIN, maybe has your financials already if you have a loan with them. And so that it would really going to speed up the process if you go to your own bank that is SBA approved, as opposed to kind of looking around and trying to find a bank. Now, obviously, if your bank is not SBA approved, you're going to have to find a bank that is. But you're recommending, if your bank is SBA approved, that you go ahead and go to them to do the application. Is that right?
Yes, sir. So everybody wants to grow their business, and we'd love to have new customers, but this isn't the time for that. And it just comes down to the efficiency and the amount of work to do this. Your bank is going to do it better and faster than I could if your bank is participating. So even the banks that haven't been historically SBA lenders, the SBA has fast-tracked them to allow them to offer this program. So if a bank's not doing it, they're just choosing not to do it. So then you will have to find a bank. There's many banks that have come out and said, we will not do a loan for anyone that was not a deposit customer with us February 15th. We haven't said that. We've said we'll look at it on a case-by-case basis and try to help as many people as we can, but the priority will be to our customers. And one of the things in this forgiveness, you have to use it for certain things. And again, we're really focused on doing loans that are going to help the economy and be 100% forgiven in this 8-week period. So we're requiring a deposit account, because otherwise, how do I know that you use the money for payroll? How do I know you use the money for rent? So we're going to require a deposit account be set up. The funds go into that, and then you write checks to those intended purposes. So at the end of the 8 weeks, we can help you certify and get your forgiveness.
Another thing that I wanted to cover, because I know I'm getting lots of questions just individually on this, and is that there's 30 million businesses in the United States. All 30 million are eligible unless you have 500 or more employees. So there's going to be a lot of demand for this. There will be millions of businesses applying for these loans. Number one, will there be enough money? There's a lot of people that are saying there's not going to be enough money, that they're going to run out. The second thing is that of those 30 million businesses, 24 million of those businesses do not have any employees. Now, if they're an employee or they're self-employed, they're still eligible to get this loan. But of the 30 million, 24 million do not have employees. The government is saying to those 24 million, we don't want you to clog up the system by you going in and asking for an application to the bank. So we're asking you to wait till April 10th. Now, hopefully there's still going to be money. Hopefully the government did a good job of calculating how much money is going to be needed. And there's going to be money on April 10th. But if you're self-employed or if you do not have employees, do not go to the bank tomorrow, because they're just going to tell you, we're so sorry, but we cannot process your applications until April 10th. There's a reason for that. They're wanting the companies that have 100 employees or 10 employees or 200 employees, they're wanting to get them in first, let them process the application, get that money first, so that when you loan money to that company, when the government loans money to that company, that they're going to have 100 employees that are going to go online, or maybe rehire, or whatever it's going to be, as opposed to just one person. And so that's why they're staggering the application dates for businesses with basically more than one employee tomorrow, April 3rd, and then the rest, the other 24 million businesses, on April 10th. I just wanted to qualify that.
Yeah, John's going to be very busy tomorrow.
Yes.
Yeah. Yeah.
So you do have an opportunity if you have had to let your people go, you've not made payroll. Again, we've had many, I've been on the phone at 8, 9, and 10 p.m. at night with my clients, just really struggling because of this and just money not flowing, or they've had to close their doors because they're a kind of business that is not allowed to stay open. But you do have an opportunity to rehire those employees if you can rehire them and get them back on your payroll. Again, your loan for those pay that you're paying them is going to be forgiven. And then you have your employees right there ready and still with you, so that when you can't open your doors, they can start helping you right away. So John already mentioned this a little bit, but where do you go? So it is an SBA loan. So if you applied for the economic injury disaster loan, that was directly through the SBA. You did not go to a bank. You went directly to the SBA. This is actually through a bank. So as John said, you have to go to an SBA approved bank. Ask your bank, because if they might not have been SBA approved yesterday, but they might be today. Because the SBA is making that a very fast process to get them approved so they can help do those loans. And then when can I apply? So we already addressed this as well. And I think each bank has, as far as what they're going to require. So John, do you want to reiterate again what your bank is going to require? And this is not the same for every bank. I've talked to multiple banks and they're requiring different documents.
Yeah, what we suspect that we're going to require is going to be, for a customer, I'll start there. For a customer, we're going to need your 941 so we can see your W-2 wages, payroll cost, any health insurance benefits paid, retirement benefits paid, and then a payroll roster. That way we can look at because your 941 might have $500,000 in payroll for the quarter, but if two people made $200,000 instead of $500,000 being the number you use, now you're taking out the $100,000 that's over the $100,000 limit for each of those, and you're down to $300,000. So we need the 941 for the total number, added to payroll benefits, those categories you covered earlier, any direct payroll cost, and then we need the payroll roster to go through and verify, the $100,000 cap.
Okay, so that's John, because I've heard of that, the payroll roster, but I can see how the banks would need that. Know that this is all businesses, including churches. Churches are 501c3 organizations, so churches do qualify for this, as well as businesses and the self-employed. So John mentioned that already, just some information that you're going to need to get to that.
And Annie, I know, I don't think we've addressed it yet, but startups, so businesses that were not in business in 2019 can use your January and February payroll. So again, we don't have official guidance. They haven't filed a quarterly tax filing. What I would suspect that we would need would be your bank statements showing those checks written.
And probably your 941 payroll tax deposits too, that would prove your payroll as well. Here's some banks are asking for tax returns. Some banks are asking for financials. So again, you have to go back to your bank and find out exactly what they're looking for.
One thing I want to add here, by the way, is that really for the first time in my that I'm aware of, that this applies to nonprofits, and it also applies to churches. And there's no difference between in this act, the CARES Act. There's no difference in the eyes of the government whether you're a church, whether you're a nonprofit with employees, or whether you're a business. Churches are eligible to apply for this, as well as nonprofits and of course businesses. So I do want to make that distinction. We've got a lot of questions from people. Well, I'm on the board of a nonprofit. can we apply for this loan for 8 weeks, for this payroll for 8 weeks? And the answer is absolutely yes. Nonprofits can apply, churches can apply, and
Steve, only 501c3 nonprofits.
yes, 501c3 nonprofits.
If you're another kind of an association, I'm sorry to say you do not qualify. I know some Chamber of Commerce's and some other type of organizations have talked about that, but they cannot qualify. If you are a 501c3, yes.
And hopefully they'll expand that.
Also, the other thing is some churches have not applied for 501c3 status because you don't have to if you're a church. And so if you're a church that is listening and you are not a 501c3, then you'll need to talk to your attorney or your CPA and figure out whether you can apply as well. All right. What else, Annie? Are we ready to take questions? And we got, I don't know, 50 questions here that we're getting in. So I want to start with some of those. Before I do that, I actually also want to talk about what everyone's focusing on this act, the CARES Act, but the Congress has actually passed 3 bills. The first bill was called the Economic Injury Disaster Loan, and these are loans that you can get up to, if you're a business, up to $2 million, and they're not forgivable. In other words, the government's, but it's not like the government's saying on this one, on the Economic Injury Disaster Loan, that they're gonna pay for it. This one is a loan. What's interesting to me, and this is what I've done a lot of research on this. If you apply for the loan, and you have until December 31st to apply for the loan, and you get rejected, they're still going to give you a $10,000 grant. Now, this sounds like kind of crazy to me, but this is what I'm hearing. So you might want to talk to your CPA, or talk to or talk to the SBA. But what I'm understanding is that you make your application, they're going to send you $10,000 within 3 days. If they turn around and they reject your application, you get to keep the $10,000 as a grant, and you do not have to pay it back. And so I know this was not the purpose. You know, we're mainly going to talk about the payroll protection program, but this is what I'm understanding. So, Annie, are you?
So if you do get the $10,000, and that's great, then that becomes that $10,000 becomes part of the payroll protection program as well, and so it would reduce by $10,000 how much you would be forgiven in the other. So it becomes part of that calculation. That's
correct. In other words, if you do both, if you get this $10,000 grant, now understand, if your application is accepted, then the $10,000 becomes a loan. So it's kind of funny. It's almost like you want to apply. I mean, obviously you have to think about the ethics of all that. I haven't really thought about that, but if you get accepted on the loan, then the $10,000 is an advance on the loan. You got to pay it back. If you get rejected on the loan, what I'm understanding is it becomes a grant. Now, if you also apply for the payroll protection program, and then let's say you got $10,000 or you got $100,000, any amount that you get at that point, that gets reduced. Whatever amount you can get from the payroll protection program is reduced by the amount of the emergency economic injury disaster loan that you receive. Okay, that makes sense? Well, hopefully, I guess no one can answer. So anyway, hope that makes sense to everyone. Okay, we'll go to some questions here. Does the July 15th extension include personal? Is it just for business? Is it business and personal?
It's everything that was due on April 15th. So your personal and your C Corps, trust, it's all extended to July 15th. The filing is extended, as well as any payments are extended to that point as well.
Okay, you mentioned there's a posting requirement of a document for offices, but here you are, these offices are closed, and most of the employees, maybe the employees are working remotely. Do you know what the requirements are to post the notice?
I don't know what that would be a good HR question to ask, but I know what I did is I sent it out to all my employees so that they did have notification and that they did receive it.
Okay.
I think a lot of organizations have done that. Just if your employees are remote, send it to them. That way they've been notified.
And that became effective yesterday. Yesterday, the rules and how much you're required to pay your employees started yesterday based on if they're having to stay home with their children, or if they're having to stay home if they're sick or quarantine. There's a lot of rules within that. But I would recommend you talk to your HR lawyer.
Another thing that we haven't even not talked about, of course, is unemployment. If someone is unemployed, they are now eligible for up to 4 months of unemployment benefits. And usually it's like you get 50% of what you're making, but you can actually get that 50% plus up to another $600 per month additional income. So there's some unemployment benefits that we really haven't had before, or these have been greatly extended. And so those are other options that we're not going to talk about today, but just be aware you can Google that online. You can talk to your CPA or talk to your attorney and get information on that as well. So here's someone, let me see. I'm a massage therapist and dietitian working from home. How does this apply to me?
So that would be you're a self-employed or sole proprietor, and you would need to produce your Schedule C to your bank, and that would be next week on April 10th.
Okay. Here's one. My payroll is double today what it was last year. How do I get the full amount to cover my current payroll? I think we discussed that, but Annie, if you don't mind responding to that.
Well, you still, to get the loan amount goes back to 2019. So you take those payroll costs, and we'll send you out the presentation so that you can review those payroll costs and make sure you have everything in there, times 2.5. And then whatever you're paid then during that 8-week period. And you can't be paid more than 100,000 prorated. So really 100,000 divided by 12. That's the maximum amount that you can be paid.
Yes. Okay. And then I'm trying to kind of read questions while you're talking and everything. So for those that are churches or ministries, one of the questions that I've been asked is, when you ask for, when you apply on this loan, what about housing allowance? In other words, if you're working for a ministry or a church, some people are eligible for housing allowance. How does that work with your wages, and how much the application can be? Can it be based on your housing allowance?
John, do you have clarification on that?
I would say not at this time. You know, we've got a very specific list of what's included. And so our take will be, if it's not included, it's excluded. So
Okay.
W-2 wages show up on a 941. Health insurance. People ask, do your health savings contributions count? No. Health insurance. So we're going with, here's the list. This is what we've been given as guidance. Because what we don't want to do is put somebody into a bad situation where we say, yeah, let's include these 7 things and hope and pray that they're forgiven. And 8 weeks down the road, you've got a pretty big loan that you need to repay.
And it specifically says group health insurance too. So I don't know how they're going to calculate if they're going to allow sole proprietors to include their piece in there. But right now the law says group health insurance.
Yeah, and you know, obviously, if you're a church or a nonprofit, I would check with your attorney because I've talked to some churches that have said, absolutely, we think housing allowance applies, and because it's wages, and even though it's not turned in on to the IRS as W-2 wages, so that's going to be a question that I would talk to your attorney about. So what's the status of the initial dollar amount we heard of, about $1,200 per person and $500 for each child, and what does that fall under?
So that's still in effect. That is part of the CARES Act as well. And that's not part of the payroll protection program, but those are going to be checks that are going to be sent out depending on if your income level is below a certain threshold.
Yeah, I think it's 75,000 and 99,000 per person, and then it doubles if you're married, filed jointly. And if as long as you filed your 2018 or 2019 income tax, they're going to know what your adjusted gross income is, and it's going to be based on your adjusted gross income, and they'll automatically send those checks out to you. If you've given them a bank account, they'll deposit those in your bank account. And if you haven't done that, then they'll mail you a check to the address on your tax return. So do you have to file for the extension, or is it just automatically extended?
No, it's automatically extended. We didn't, no extensions need to be made on April 15th, not at all. I had one question, and it was talking about S Corp distributions. So this is payroll. So if you're an S Corp, you should be paying yourself a reasonable salary. That is the law, to pay yourself a reasonable salary. If you're only paying yourself distributions, that is not included in this calculation. It has to be on W-2 wages.
And along those lines, we mentioned it earlier, but I see it in the questions, and it's been a question that I've got countless times. If your employees are 1099, they're not your employees. They're independent contractors. That's what you've agreed to. That's what you've set up. They're going to need to go and get their own loan on April 10th. They're not your employees. They're independent contractors. That's what you've agreed to when you signed that 1099.
So they can still get help. They can still get help, but they're going to be applying for it, not you as the business.
Yep.
Here's the question, which would be an accounting question. What if your company uses a PEO so we don't file 941s?
So I've had that addressed to me, and John, I don't know how you're dealing with that, but in my opinion, I would think that they would allow the company, not the PEO, to get the money, because the PEO, they're not really kind of their employees. They're actually the business entity's employees, and how the IRS views that is that they're the entity's employees, not the PEOs. Would you agree, John?
Yeah, we would have to seek guidance on this, but what I would anticipate the answer would be is we would take the checks written to the PEO as payroll cost.
Right. So
and only take out federal taxes.
The PEO is really only a reporting agent. So they're only a reporting agent. They're not really the employees, and the PEO is not having the economic impact of the business. It's the business that's having the economic impact. So you would need to get some kind of proof from your PEO of what your salaries are.
Yeah, so this probably didn't apply to a lot of people. So let's move on with this. So I have, so there are some questions of should I take out the loan, and are there any requirements? In other words, for example, someone said, they said, hey, I don't know if my question got answered. What if my payroll's double? This isn't for you. If your business is doing really well, and when I say it's not for you, it's not for these other employees that you've added. If your business is doing really well, and you doubled, the government's not trying to help you. They're trying to help the people who are really struggling right now, who can't pay their employees. So that's why they're limiting the loan. Now you can still ask for the loan, and you can still ask for the loan for the employees that you had in 2019. You just can't ask for the employees more than that, because the government's trying to help companies that are struggling right now, not employers that are adding employees to their payroll. Let me see. There's
also on the loan itself, you're going to have a lot of certifications that you have to sign off on.
Yes.
And like one of them says, the current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. That's one, but there's 7 things that you're going to have to certify, and that's on the application. You can go to the U.S. Treasury .gov, I think it is. If you Google U.S. Treasury Payroll Protection Program, it'll probably get you to this application, and you can go look at those certifications.
Here's another question. applications are being accepted beginning tomorrow. When is funding expected to happen?
We're still waiting on guidance. So a couple of things around that, Steve. We don't know as a bank if we certify this file with the SBA before or after funding. And so once that's determined, that's really going to decide how long it takes. If we can certify it after the fact, then we've got the application ready to go in the morning. You fill it out, you upload the documents, I look at it, I verify the amount, I send you documents through e-sign, you sign it, and we fund your account here with us same day. Super fast, okay? If we have to take your file, turn it in, have the SBA assure us that it's a fundable file, that will obviously delay it. A couple of thoughts around that. I've had people tell me they're going to file at multiple banks and see which one gets it done the fastest.
Sure.
One of the things you sign in the application is that you have not made application elsewhere. In the CARES Act, they also, the SBA, they put $25 million to the SBA's Inspector General. Anytime that there's a gift like this, there's also people that get greedy and commit fraud. They will come at you with full vengeance. Do not submit multiple applications.
Oh yeah, I mean, you sign it. You sign the document that says you have not submitted multiple applications, as a matter of fact. So yes, do not. Okay, we got lots of questions here. We have over 50 questions. We've answered a few of them. So I'm gonna keep asking questions. Obviously, people can drop off at any time. So we are a manufacturer producing goods for the construction industry. Right now, construction is exempted from shutdown in most states, so we can continue to operate and keep people at work. What if we take out this loan and then the government changes the rules about that? I think I can answer that. And the question below it is, are there any restrictions for currently defined essential businesses? Essential businesses, non-essential business, that's irrelevant, okay? The question is, have you been impacted by the coronavirus? And you can sign a statement that you've been impacted, you're concerned, or whatever the statements are. It has nothing to do with essential businesses or not. This is money the government's giving you to help you with your payroll for the next 8 weeks. So if the government comes back and says construction is not an essential business and shuts it down, that has nothing to do with this, with the PPP. The PPP is not based on whether your business is essential or not essential. Here's a question from someone that my husband and I run an LLC partnership. We're the only employees, so we need to wait until April 10th, correct? The answer to that is no, you don't need to wait till April 10th because you're both employees. That's 2 employees. So if you're more than 1 employee, I would file by April 3rd. Now, I assume that's correct based on partnerships. It's an LLC partnership.
I think that's probably right, Steve.
Yeah.
There's, well, one, I just want to bring in part-time employees are included in that payroll calculation as well as full-time, part-time and full-time together. That's a good question because, and it's one that I've wondered a little bit about too, because if you have a partnership, then you are not technically employee, you pay yourself guaranteed payments. And guaranteed payments then are treated just a little bit differently. So John, has your group addressed guaranteed payments? Because if a partnership only has partners and not other employees, you actually they don't file 941s and they don't file W-2s.
Yeah, again, going back to the strictest definition, if it's not included, it's excluded. You know, because the same argument can be made with the S Corps. You know, I give myself a $50,000 salary and I take distributions for the remainder. I think that falls in the same category, and I know that gets real tough and real messy. And what I can assure you, and the reason that guidance isn't final, they've moved so fast on this. There are really smart people raising their hands saying, this needs to be fixed. You know, I think a lot of people think about nonprofits as 501(c)(3)s. Okay, all nonprofits. No, that's not right. A chamber, I think, is a 5017. You know, so I think that you will see some adjustments to this, but today I would say that partnership income would be excluded.
Oh, here's a great question. If you go to your own bank, what financials do they need outside of payroll? Do they need a P&L statement, profit and loss statement? Do they need a cash flow statement, or really just the documents that you mentioned, John?
I think we're going to take the stance that you don't need those other documents. This isn't really a credit decision. This isn't really a capacity to repay. It is what we're most concerned about is character. Will you take this money, use it for the intended purpose, and pay us off with forgiveness in the next 90 days? So I don't think the economic injury disaster loan, that one has a credit component, and that's being issued straight from the SBA. You have to be credit worthy. There is no credit qualification that we're using in our underwriting.
That's a great qualification. Here's one. Will you please provide an example? And we appreciate these questions because we know there's just lots of questions out there, and we're going to keep going for a little while here. And we know this is a little longer than what we thought. It's 11 o'clock now, but we're going to keep going because these are really great questions. Will you please provide an example of a simple loan amount and repayment scenario with calculations? For example, a business with 10 employees, each making $100,000 a year. How is the loan amount calculated, and what of that amount would be forgiven?
Well, with that, you would say, so 10 times 100,000 would be $1 million. $1 million divided by 12 is something else.
80,000.
Well, yeah.
And then that amount times 2.5. That's going to be your loan amount. Then what is
so it's roughly $8,300 a month per person, because that's 100,000 divided by 12. Yeah. So $8,300 a person times 10 people is 83,000. You take the 83,000, you multiply it by 2.5, you're at 207,500. You take that 207,500, that's established your loan amount. The only thing that goes into it, I think Annie did a great job on the slides, the only thing goes into the loan amount is payroll. It's not your other expenses. That's what can be used with the money. So you take the 207,000, you take it out. You continue to pay your people 8 weeks worth of pay. The remainder of those funds you use for rent, interest on mortgage payment, and utilities. If you use all the funds for those four purposes over an 8-week period after taking the loan out, you file for forgiveness, you certify that you used it for the appropriate purposes, you provide the documentation, and the loan's forgiven.
And make sure you, if you're on a bi-monthly, it's not 2 months that's forgiven, it's 8 weeks. So you depends on when your loan comes out, if you would be able to get 4 pay periods in there or only 3, but it's 8 weeks, not 2 months.
Yeah, so it'd be a little less than the $8,300 per employee per month. Okay, so I'm a manufacturer and have practically no business. I would like to wait and bring back my employees as long as possible, but I don't want to risk the government running out of money to loan. How long should I wait? Now, this is a great question because I was talking to a guy yesterday and he just had to lay off 25 employees. And I said to him, well, you can, if you hire them back, you can get the government to pay for them. And it's a large company, but you can get a loan up to $10 million. And so he said, I don't think I'm going to hire them back. I think business is going to be very slow for the rest of the year, and they're going to have to get unemployment. So this isn't just a no-brainer, like, oh, let's just go get the loan, because there is unemployment benefits that the government is extending, but my understanding of the governments is that they really want you to hire the people. They really want you to bring them back and pay them for 8 weeks, and then if you can't keep them, then they can go on unemployment after that. Obviously, the government only has so much money, and that's kind of the question. If you wait too long, I can almost assure you the money is going to be spent. And so who knows, you're going to have to pray about some of these decisions and decide, do I want to take a loan or do I not want to take a loan? For example, what if I'm doing great? The business is doing great right now. should I take a loan? I think that would be a question between you and the Lord. And because obviously this money is designed for people who are in need. But on the flip side, the government is saying, I can think of an example where in Exodus chapter 2, where Pharaoh's daughter paid Moses' mother to do work she was already doing, which was, I'm going to pay you to nurse this baby. So, you know, there are arguments both sides. These are questions I think where you need to get before the Lord and say, am I supposed to do this loan or not? Here's a couple. I mean, just questions just pouring in. My understanding is with the EIDL, you can still not accept the money. So, for example, you get approved for a loan doesn't mean you have to take the loan. Here's another question. I receive a W-2 as a professor at TCU, but my self-employed income as a musician accounts for over half of my household income. Will I still be able to receive based on the Schedule C musician portion?
I believe so. I believe next Friday on April 10th, you can claim it.
Yeah, in other words, the question is, hey, I work over here for TCU in this case, but for a company, but I also have a part-time income over here. Yes, you have a business, you're an employee of that business, and you should be able to receive a loan. I've seen nothing about if you work two jobs and you're an employee in one and you're an owner of a business in another, that you cannot receive the money from the government for the business that you own. So here's a question. How broad is the definition of lease costs? Lease cost. Example, are leases for cars, office equipment, et cetera, covered in the eligible expenditures for the loan, or is it just leasing office space?
So we've not received clarification on that, on really any the leases, the rent payments, or nor the utilities. Exactly what does that mean? I think that's going to have to wait and probably won't come out for another week or two, or maybe more.
Yeah, and understanding that if you do a loan, it's not based on the lease costs. The question then would be, what lease cost can I pay for? But the loan is not based on the lease cost. The loan is based on what you're paying employees. Here's one. As a sole proprietor / freelancer, my understanding is I can apply for both unemployment and PPP, but that seems like double dipping. What are your thoughts?
The whole purpose of the PPP is that people are not going to unemployment. And so if you're getting the loan, then you have to pay yourself. And if you're paying yourself, then you should not be qualified to get unemployment. So I'm not sure how you could you'd have to report to the unemployment office that you're actually getting paid in order to get that amount forgiven. You can't get both as long as you're being ethical and reporting your pay.
Okay, concerning the payment of $1,200, do I need to apply for this, or is it automatically sent to our home? And did I hear it should go to my bank? You do not have to apply for the $1,200. It will automatically be sent to your bank if the IRS has your bank information, if you provided that to them. If they do not have your bank information, the government will then send you a check to your house or the address that you gave them. Okay, another thing I wanted to ask, on your payroll, when you apply to the bank through the SBA, when you apply on the payroll, is it wages plus benefits plus all the things we talked about, or is it just wages that you base the loan on times 2.5? Right.
So then you go back to that, and we'll send you the slide deck. But you go back to that slide deck that it says, what are payroll costs? And so payroll costs are all your wages, plus any vacation that was paid within there, not accrued, plus your group health insurance costs, and plus state unemployment and any retirement benefits that you paid out last year. So that would be like a SEP or 401k matching, defined benefit plan that would be included in there. I think that's everything that's on that slide.
Okay. What is the difference between self-employed and sole proprietor? There is really no difference. The question is, do you have any employees? You can be self-employed and have employees. So
I think it's the opposite. You can be a sole proprietor and have employees.
Right. You can be a
But
sole
this,
proprietor. Thank you, John.
we had fun with this for 5 minutes yesterday,
Yes.
saying what is the lease payment. I mean, again, guys, we said it at the very beginning. We're giving you the best information we have today, and the people that wrote this legislation did it with the best intent. The interpretations with the best intent, but there's some things we still don't know. But our understanding is a sole proprietor can have employees, doesn't have to have employees. A self-employed is truly self-employed.
Okay, here's a question. What if we have multiple businesses? Do we file for each?
I think you'd have to go back and look at all of them would have still a max of 100,000. So you can't get $100,000 out of one company and also be paid $100,000 out of another company and do that together. If you have multiple businesses, then you're going to have your common ownership rules that are going to play. Your bank, hopefully you'd be submitting all of those to the bank and disclose that, but it's 100,000 per person. If you have multiple Schedule Cs, that's the same. You could pull them all together, but the bottom line is the most that you can get is the 100,000.
Okay, here's one. Do you know what the interest rates are on the disaster relief loan? The interest rates for the disaster relief loan, the economic injury disaster loan, is 3.75 for businesses. And what's interesting is a 2.75 interest for nonprofits. That's the interest that we have right now. And then a question is, how do churches apply for the PPP loan? I assume it's the same as with businesses, John.
Yes, sir. They'd be eligible to apply tomorrow.
Yeah. Now, some churches have not applied to be a 501c3. We're not going to be able to answer that question. If I'm a church and I'm not a 501c3, can I apply? We're going to have to refer you to your attorney on that one.
If you're not a 501c3, then you really should be filing a Schedule C as a sole proprietor. That the church should, because only 501c3s are exempt from filing. Then you would file just the same way, like we've talked about Schedule Cs.
Okay, man, we got so many questions. As an LLC, as long as we have filed a Schedule C, would we qualify?
Yes.
All right. We as owners are currently and have been on payroll. We just reduced our hours to cover our employees. How would we address that?
Well, you can rehire them back again. You can give them more hours so that they can get paid. And what I think the goal is the 8 weeks is that the president and all of us are hoping that this crisis is over in 8 weeks. We can't tell the future, right? But we're hoping it's over in 8 weeks. So it's keeping your employees on the payroll for that 8-week period. So if you're going to get reimbursed and the government is going to forgive you for that, then what does it hurt to bring them back on, get them full pay so that they can help, pay their own mortgage and provide food for their family?
Okay, so I think the question they were asking is it okay to, in other words, we reduced our pay so we could pay more of our employees. Can we up our pay back up to what it was? And that's a really good question. You understand what I'm saying? So here we are, we base our loan on 2019. Let's say we don't have as many employees, but we boost our pay up, and we were only paying ourselves $50,000 a year because we wanted to help pay for our employees. But I was making $200,000 a year. Can I take my personal payroll back up to $100,000?
I think one of the forgiveness factors is going to be that you have to have the same full-time equivalent employees that you had February 15th. So if your business wasn't harmed until this and you had some layoffs, if you restore payroll, number of FTE, to your February 15th payroll, you'll be forgiven. If you choose to bring 75% back, you're going to lose a factor in that forgiveness. The other piece that we hit on in the slides is if you reduce somebody's salary by 25%, you need to bring it back to the full pay, because anybody with more than a 25% reduction will not count for the forgiveness. You agree with that, Annie?
Or it'll be discounted. You'll have some forgiveness, it'll be discounted. Well, John, if a company or if a person has maybe 4 different companies and they all have separate tax ID numbers and they run separate payrolls, is that 4 separate applications?
4 separate applications delivered into 4 separate accounts, which from a commingling, if Annie's your CPA, I know you're doing that anyways, because you don't want funds from one business into another business's account.
Okay, here's one. I haven't filed my Schedule C yet for 2019. Do I need to do this before applying, or can I use 2018? I don't even know if that's relevant, really. For applying, it's just going to be based on payroll, and you're going to have to prove up your payroll.
Well, and their payroll is their tax return.
Yeah. What my banker or another banker is saying is that they need their 2019 financials, and that before it's paid back, they're going to probably have to have that 2019 return prepared so that the bankers can prove it up. Because I know our firm, we can't do it in a day. We can't get all these tax returns prepared by tomorrow.
Right,
yeah, I think for us, we would want to look at the 18 and then the 19 financials. If there's a dramatic difference, I'm going to have to discount that loan back to what, because we know sometimes financials don't make it to the tax return. And so I would feel very leery about making a loan against a higher number than what they might be willing to file with IRS.
Okay, that's a really good point. What if some employees are employed by our temporary agency? In other words, here I am. I'm paying a temp agency to provide employees. How does that work?
I don't think those are going to count because they're not your own W-2 employees. At any time, you could stop that relationship or that contract with them. They're more like a contract labor to you. I don't believe that they're not on your W-2s, and they're not going to be on your 941s.
Yeah. Since my spouse is out of work, I want to boost my business from part-time to full-time. For the loan, can I figure what I'm losing by not having my phone ring for new clients since the shelter in place has started? And how would I calculate this? And can I ask for this amount as a part of the loan? The answer is no. The loan is based on your employees from 2019. So
sounds like they'd be a better fit for the economic disaster loan.
That's correct. Because obviously the negative part of the economic disaster loan is that it's a loan. You have to pay it back, where if you follow the guidelines on the PPP, you do not have to pay it back. So,
but if keeps you afloat, then it's a great gift.
I'm sorry, John?
But if it keeps you afloat, keeps you in your house, keeps your car payment made, it's a great gift.
Yeah. Please explain the gross payroll. Do we take the payroll taxes out of it to calculate?
No, it's the gross payroll, the gross payroll. So on your 941, I think that's line 1 or 2, whatever's that gross amount is the payroll.
Okay, for an S corp.
But we're taking sorry, let me just make sure we're taking the federal taxes out, right, Annie?
No, it's your gross payroll. It's your gross payroll. But you don't get to include your payroll taxes.
What do you mean by that, Annie?
So some people have thought that part of their calculation they can include the employer payroll taxes. You can't include the employer payroll taxes.
The income tax
expense. It's only the gross payroll plus health insurance plus retirement benefits plus state unemployment and vacation pay, whatnot. But your vacation pay, that's all going to be in that gross payroll amount.
Right. Okay. If refinancing a mortgage to take advantage of lower rates, could mortgage points, the fees you pay obviously to get the mortgage, can they be included as PPP costs that could be forgiven?
This is for debt. I'm almost certain, Annie, you correct me if you have something different. This is for debt that existed before February 15th.
Correct.
So I would say don't refinance your debt for the next 8 weeks.
Yeah, if you're going to take out a new loan, that will not count. You cannot, if you take out a loan after February 15th, obviously we're after February 15th, you cannot deduct the interest on that loan when you're considering the forgiveness of your PPP. It's only for debt that was before February 15th.
Correct.
Okay. Let me see. We got more questions, but I've been kind of skipping around. So let me see. This is interesting. What if you're a commercial landlord with no employees, but tenants are expecting not to be able to pay? What's the guidance suggestion from the people on the webinar? It has nothing to do with the PPP, and I think that's something you pray about.
Well, it has a little bit to do with the PPP, and that is why rent was included as being forgiven, because it's known if you don't have any money, you can't pay your rent. And so if you do, so hopefully you're the landlord, hopefully your lessees are getting this loan. And if they get this loan and they pay you your rent and back rent, if they have it, then that's going to be included in the forgiveness amount.
Yeah, that's a really good point. Yes. So I would talk to your tenants about that. Encourage them to go get the loan so they can pay you and they'll be forgiven. Okay.
And then also that sounds like a perfect person for the economic disaster.
Yes. Once again, here's one, is it acceptable to increase our hours as the owners on payroll and apply for the payroll protection plan? And I think the answer to that is absolutely, up to whatever you did in 2019, right? In other words, I can understand what people are asking here. Here we are, we're not working very much, we're not paying ourselves very much. Can we take out a loan, pay ourselves what we were paying ourselves, and have that, and then have that amount forgiven? It seems to me like you would. What's your thought on that, John or Annie?
I think here's the key part. If you do that for yourself, you need to make sure you're doing that for everybody else, because you have to have, for the forgiveness to happen, you have to have the same full-time equivalent as you did on February 15th. So if I've got $10,000 a month payroll on February 15th, just making up a number, and then I've laid everybody off, and I decide that I've laid the other 5 people off, and I'm decided I'm going to take the whole $10,000 for my salary, you're not getting forgiven.
Right, because you don't have the same number of employees. That makes a lot of sense.
You know what, somebody just mentioned 941s, which I know we've been running payroll reports and getting their gross pay from there, but on those 941s, you do have, if you have retirement funds, that's not taxable for income tax, but it is taxable for Social Security. If you have health insurance that's pulled out, then that's not. So I think there will be a reconciliation back to, but the 941s are giving the banks a basis and allowing you to give that reconciliation back.
And then you have to justify the basis, right? When you have to justify what you spent, once you borrow the money, you have to justify what you spent. So some of the questions that are being asked is, well, here it's going to be based on 2019, and then you have to justify what you spent and make sure you line up with the guidelines. So for it to be forgiven. Now the flip side of this is that, hey, maybe you take out a loan and the government forgives 75%, and you've got a loan that got you through, and you only have to pay 25% of the loan back. That's a great deal as well. The government is really trying to help us in this situation, which is another way of saying we're really trying to help ourselves in this situation since it's our money.
Let me run through our calculation real quick. We've issued a calculator internally that we hope to share with people really soon. What we're going to do is we're going to take the total payroll, the line number 2 from the 4 941s for the year. We're going to total that up. Then we're going to add their state payroll taxes from their TWC C3 forms. Then we're going to add their employer-paid healthcare benefit, and we're going to look at either the payroll register that we're asking them to produce or the P&L. Then we're going to add the payments of the retirement benefits from the payroll register or the P&L. Then we're going to back out employee compensation of more than $100,000. And then we're going to take out any qualified sick leave from the new Family First Corona payroll, because that's forgiven elsewhere. We're going to take out employees' compensation outside of the U.S., and we're going to take out non-eligible federal employee taxes that were imposed or withheld. So I know I'm telling you this, and Annie, maybe I can get this to you to add to the slides, because that's a real complicated thing to try to take in over an audio. But that's kind of what we think is going to get us to the right number and what we're comfortable with.
But again, you're going to need to go to your bank, because some banks, I've heard some are going to ask more financial, some are going to even ask for AR and AP agings. You know, that's just what their requirements are of what that bank is going to ask for. So all the banks are a little bit different. I would say try not to call them first. I'd say go to their website first. They're extremely busy. All of your bankers are extremely busy right now working through this PPP program. So go to their website first to see if they have something up there.
Yeah, and we're gonna make available the slides that Annie presented. So we'll add that. Maybe John, you could add that form to Annie's slides. We're going to look at whether we can release the question and answer just because of liability purposes. So, but we will release the slides, and you can, if you'd like those, you can email business@kingdombusinessleaders.com. business@kingdombusinessleaders.com. We're gonna finish here in about 3 or 4 more minutes. A significant portion of our total payroll is earned commissions for sales staff. I think we've answered this, but will the reduced sales and therefore reduced commissions affect how much our forgiveness would be?
Well, commissions is included, and so it's included in the loan calculation, and it is also included in the 8 weeks that it's going to be forgiven. And so I'm not sure. Like if there's restrictions on the commissions, I don't know.
Well, I think what they're saying is, here we are in 2019, we had a certain amount of commissions that our employees earned. Now here we're in 2020, and it's half that. Can we pay them the commissions that they earned like in 2019, and the government repay that or forgive that?
Make them whole. Make them whole.
That's the question that's being asked. Can you make your employees whole from 2019 on commissions? And I don't know the answer to that.
Yeah, I think the spirit of this is make them whole. If you know, and it was similar to the question you asked earlier. If the employees are at home because they can't work, can I get this money? Yeah, if you intend to pay them while they're not there, absolutely.
Yeah. Is money going to be there for all the 6 million businesses that have employees during this first round, April 3rd? We don't know. If you want to get this loan money, we recommend that you start applying, like go in tomorrow. And it's going to be very busy, obviously. It's going to be swamped. We recommend that you go in tomorrow. Now, John, are most banks going to have this online applications, or are you going to have to go to the bank personally?
I can't imagine somebody wanting you in their lobby today, right? The reason we're here is the corona. So 2 things. It is going to be unprecedented demand. We're going to be busier than we've ever been before. So websites are going to crash. Things are going to be down. You're going to try to log in. It's going to time out. Be patient. Know that your neighbor's doing the same thing you're doing. We'll get to everybody. But yeah, I've had people email me the application, email me all the forms. I'm not taking anything through email. It's got to be done online. That's the only way we can efficiently process this. If you email me your application, and I think every bank is probably taking this stance, I'll get to your application in 2 weeks.
Yeah, yeah. Man, I'm really glad that we asked that question.
And think it's been, be kind and gentle with your bankers, because they've only had 5 days to write this program too. And so there might be kinks or maybe something's missing. But they have not had a whole lot of time to prepare for this. And some of your smaller banks, if they do get SBA approved, they actually might be processing the paper because they don't have the capacity to have somebody write a program for them to accept these electronically.
I mean, that's absolutely be Christian when you talk to your banks, I think is what you're saying, Annie. Okay, last one here. What is the estimated turnaround time on the economic injury loan? What we're hearing is 21 days. 21 days to respond, to process, and to fund. What if you're 501c3 with only volunteer staff, but you have rent to pay? Is there any help for those churches? If you just only had staff, volunteer staff, your loan is based on payroll from 2019. So if you have payroll for 2019 for yourself or others, you can apply for the loan, and then you can use that money for rent. But what I'm understanding is you actually can only use that money for rent for about 25% of your expenses. If you use it, so in other words, if you have no employees that you're paying and use it all for rent, only about 25% of that is going to be repaid by the government. Is that right, Annie? Is it some guidances that we're getting right now?
Right. So that wasn't part of the law, but that's part of the new SBA regulations and instructions that they passed down to us because of the high demand, that they feel like the payroll is the most important. And so they've told us likely 75% would go to the payroll.
Yeah. Okay. Well, we're out of time. And we're so grateful to you, John and Annie, for coming on during this incredibly busy season that you're both experiencing, to come on and bless our Kingdom business leaders and others who are on this call and on this webinar. We've had over 300 people who've signed up for the webinar, and a lot of them are still online listening. I've also received, I'm talking about me personally, over 100 questions about different things about how we're going to respond to COVID-19. What do you do for your employees? And so we're either going to do another webinar next week. We're going to do a podcast. We're going to send out emails responding to your questions. But we sent out a survey to our Kingdom business leaders. And if you want to find out about Kingdom business, becoming a Kingdom business leader, you can go to Kingdom Business gateway.kingdombusinessleaders.com, gateway.kingdombusinessleaders.com. If you want to find out about becoming a Kingdom business leader, all the program that we have for business owners and the high-level executives. But I'm going to be answering those questions. We sent out a survey and got more than 100 specific questions. We've answered some of those today, but we'll be responding to those questions over the next week or two. But once again, John, thank you so much. Annie, thank you so much for blessing the people on this webinar. And we really appreciate your time and taking the time to this incredibly busy season to be with us today.
Welcome. Bye.
Thank you. We get through this together, right? Just like everything else.
Listen, we are going to get through this. God is with us, and he's not surprised by this, and we're going to make it through together. So thank y'all once again so much. God bless you.
Thank you.